Hey, everybody. Let's see if we got anybody on here. No, we don't, not yet. It's just us. What's going on? Normally we have a bunch of people on here, but
Oh, one brave soul.
oh, here we go. We
Somebody
got a brave
joined.
soul.
Yeah.
We got brave souls coming on here. This is awesome. Yay, you
Yeah,
are
we're
here.
Yeah.
We were like, nobody gonna show up to our party. At least we got a note taker.
Yeah. AI's here. We're good.
All right, cool. Well, welcome to week 100 or 271 bajillion. And we do have Zoom working. We have air coming back into this podcast studio that we did not the first time that we did this 3 weeks ago. We've got guys out there, and so auto framing may try to get the workers that are adjusting all of our HVAC. We had vents that were shut, so no wonder it was freaking hot in here. So anyway, so we got 5 brave souls on here plus an auto taker, note taker. So it's a weird day. So we're gonna riff and talk about whatever you guys want to talk about. I think I saw Papa Joe on here. Oh yeah, now we got more people on. So that's good. I apologize because we are in this Zoom room, which is great. Hey there, Papa Joe. But we were not necessarily trained on the system yet, and the people that were training us didn't really know as much as they thought that they knew. And so we were told, oh yeah, you're gonna have to move everything over to Teams. So we did, and we heard the outcry from you all. Thank you, Joe. Thank you, Joseph. Oh, and now, hey, there's Lori. Hey, Lori. Hi, you're in the frame.
Hashtag worth it.
Yeah, it's worth it. You know, it's funny. So we're still figuring this room out, but we did find out, thanks to the Ascend IT people, how to make this a Zoom room and Teams room. And so we're using the neat bar on this thing, which is cool. But they're the guys working on the HVAC. You can see them. So, you know, it's all about transparency, Adam.
Yeah, we don't know how the camera's gonna pan in now, so there you go.
It's a good thing that we're really not that uptight about the production value, because we'd be in a real world of hurt. So anyway, thank you guys for joining us. Let's see what, we're up to 15 people. We were thinking we're just gonna be the lonesome 2 of us, you know, in here, but yes, Papa Joe and Joseph, thank you for weighing in on us. We'll talk and riff about whatever you guys want to talk about. I know one of the things that we want to talk about is social media experts that have actually caused people, you know, penalties.
Yep.
And like real money out of their pocket. And I don't think that the social media influencer had any of their money taken out of their pockets.
No.
When we posted this the other day, I got a note from a friend of mine in Los Angeles who's a film producer, and he said, he goes, I know people that are in jail because of bad advice from social media, that they took bad tax advice in jail.
Wow.
Well, that takes it. So anyway, that's kind of crazy. So we'll talk about some of that stuff too. Want to acknowledge 9/11. I mean, you know, this is a sobering day. I was in those streets of in New York on 9/11, and it just is, it's kind of a gut punch every year. I never even owned an American flag until the day after. Never. You know, I was embarrassed. I was raised to be embarrassed by our country, which is like, why? I mean, so ridiculous. But nonetheless, the quick story on that one, we were under bomb threats all the time, and I was staying in Grand Hyatt right next to Grand Central. So Grand Central was the target. And so we were in the streets on 9/12. And this woman is crying, and we're just told to walk, and it's just a sea of humanity again. And I see a storefront, and the stores were the shopkeepers and people lived above them or whatever, they were open that day on the 12th. And this mannequin had a 5 foot by 3 foot flag wrapped around the mannequin. And I went into the shop owner, I said, "How much for that flag?" And he said, $20. I'm like, boom, had $20. So I, like an idiot, I wrapped myself in this flag. Here's a guy that's never owned a flag. I don't know what to do. Feel so powerless, so helpless. And even when I was in lines the day before for blood, to give blood, like, well, I can do that. Bomb threats at Citicorp, and we were like, the line was way around the whole Citicorp building. Just feel powerless, extremely powerless. And so I end up buying this flag, and I'm back in the sea of humanity. And my wife calls me, and she goes, "You're gonna think I'm crazy," but she said, "I went to Lowe's to buy an American flag, and they were out. So I bought a flagpole." And I said, "Well, baby, I got the flag." And so that was the first thing that I did, and bought a bunch of American flag bandanas the next day from a street vendor. And so that's why I wear an American flag bandana every time I work out. But anyway, this is a very, it's a country with a lot of problems, without a doubt, but it's still, I think, the best place around. And so, as business owners, I think it's up to us to do our part, set the tone for our families, but also our employees and our companies, because it's not the big companies that are driving the culture, it's you, it's me. So I just want to acknowledge that sobering day with political discourse where people can't take a dissenting view and they have to go and assassinate somebody, which happened with Charlie Kirk yesterday. Is just very sad. I don't care what side of the aisle you're on, like, that's just unacceptable. So enough of my riff, Adam, time for you to riff.
Yeah, so we'll just dive in. So today we thought, since Jack was dishing us,
Shame on you, Jack.
Jack's son is a racer. So he's currently got a race, like cool racing, like car racing. So he's got a race today that he had to do. So we thought, okay, let's talk about common tax scams that we hear all the time, because as we've been doing this webinar for a while, we've made some social media posts on YouTube and LinkedIn and others. My favorite thing as a professional to do is when I get, this text, "Hey, is this for real?" And it's like the latest thing, and there aren't a whole lot of people that are actually, credited in the tax area on social media. But if you do find them, they're usually flat bill cap, Lamborghini in the background, one guy because we keep on searching, every time we see this, one guy that we found, flat bill cap, Lambo in the background, and, also is under investigation in California for fraud.
Really?
So this is not good. So we thought we'd address like some of the common funny ones that we hear from time to time. And Gary knows that I love him, but oftentimes he sends them to me. He's like, "Hey, should we do something about this?" And I'm like,
I'm not a CPA.
Yeah, not good. So what triggered this is there was just recently an alert that came out from the IRS saying, "Hey, we've issued 165 million in fines related to fraudulent tax advice given from people that said, 'Hey, I was just following what social media told me to do.'" So usually the way the scam shows up in your feed, get this credit that the IRS won't tell you about, that no one knows about. Click here for more information. And then, they'll do it on your behalf for a fee or something like that. And And the two in particular that the IRS has seen floating around lately is the fuel tax credit and the family sick leave act.
FMLA.
So the fuel tax credit, it's funny that that's not new, that's been around for a while. The punchline is though, it only applies to off-road vehicles used for commercial purposes. So the way the credit shows up, and then, it says everybody qualifies, and no documentation necessary. So they fill out this form, on your behalf, you send it in, claim the credit, get the money back, and the IRS is saying, hey, I don't see anything here that would seem to lead me to believe that you qualify for this credit. But what the credit is like, if I'm, typical example would be if I'm a landscaping crew and I'm going to the gas station to go fill up all my blowers and lawnmowers and whatnot, like you see them all the time, like they, pull in the gas station, fill up all their stuff, filling up all their gas cans. That guy qualifies for the fuel tax credit because the idea is, there's tax in the price of fuel that's used to fund roads.
Yeah.
But the leaf blower is not going to be on the road.
Yeah, right.
Same thing apply. Another common example would be diesel fuel for a farmer. If they went to the gas station to go fill up the tractor. So that's the application. A lot of our clients that actually have off-road vehicles actually have their own gas storage on premise for the reason that, hey, it's just actually easier to have fuel on premise and never have to worry about filling out this tax credit. But anyway, that's the purpose of the tax credit. What the scammers are saying is like, no, if you buy gas, you qualify. Just nobody's telling you about it. I'm like, that is the most ridiculous thing. Well, I mean, when I say that's the most, I often say that's the most ridiculous thing I've ever heard. I hear a lot of ridiculous things, I guess.
So farmers, we had a big fuel dump at my grandfather's farm. I would imagine that qualifies.
Well, if he paid tax on the gas that went into the tank, yes.
Got it.
But most of the time, those guys are exempt from paying tax going into that tank. That's why they had the tank.
Okay. It's same way with contractors, like,
Yeah, no, if I'm filling up, the Bobcat or whatever, at the gas station and didn't, don't have gas on premise, I get a tax credit, back for that. So basically any vehicle used for commercial purposes or any commercial purpose application, that the vehicle actually isn't tagged and is off-road and you pay taxes on the gas, you can get a credit back.
Got it.
And if you think about it, it's like tax credits are actually a pretty significant portion of the price of fuel that we pay, like 30-40%, I think, off the top of my head in North Carolina. So the credit itself is a big deal. It's just that no, not everybody qualifies for it.
So if you have an EV, you don't get tax credit for the gas.
You definitely don't get a gas tax credit. So that was one of their alerts. The other alert was on the family sick leave credit. Also they were calling it the self-employed tax credit. What this was for self-employed individuals. They were forgotten in the original employee retention tax credit stuff that happened back in 2021. So they did some late procedures to allow self-employed individuals to be able to take the employee retention tax credit, even though they had no employees on their own earnings.
Got it.
So it only applied in 2021, but there are people out there now claiming, hey, no, it still applies. And the IRS has cases of even like Gary with his W-2 claiming it. It's like, no, like Gary's boss could claim it. If it was 20 or 21, not 2025.
Right.
So it's pretty ridiculous. And what sucks for the taxpayer is that they're paying a fee to these companies to help them fill out the forms, and the companies have no recourse. Meaning like if the IRS comes back after the person, it's not like companies oftentimes are out of business. Or even if they are still in business, the last thing they're going to do is exert any effort to defend you, in this process.
Well, that's why we chose the partner we did for ERC today.
That's right.
Because we knew that there were gonna be a bunch of scammers out there, and they would be here today, gone tomorrow, and this is like real serious stuff. So we're known for being pretty aggressive, but in this case, we were like, we pulled back and we got really conservative.
Yeah.
For you. So, before we keep going, Papa Joe asked this question: did the Fed rate change yesterday?
So AT&T landscapers cut my AT&T cord.
Really?
So like, I did not watch any of the news yesterday, so it's getting fixed. It's a good question of like, I actually don't know. So I was gonna say, Gary, while I'm stalling for.
All right, I'll look. I'll find out.
So we'll get an answer to that, Papa Joe. So the next one that I was gonna hit on is cryptocurrency. This one has multiple flavors of stupidity associated with social media. And the way it shows up is, nobody knows this, but crypto isn't subject to tax. And the statement really has two elements associated with it. Element number one is, because most crypto exchanges are associated in foreign jurisdictions, those are earnings of that country. And since you're not a citizen of that country, you don't have to pay taxes. That's like position one. So to debunk that in its entirety, in the US, you pay taxes on your global income, period. There are ways to legally offshore some money, but it requires a bunch of hoops. The country that you're trying to, this is like the Apple is incorporated in Ireland, thing, or a company that's headquartered in Nevis or whatever. But the thing is, like, that works, but the countries that you're incorporating in, like, they got wise to it, and it's like, well, hey, like, we actually probably would like some taxes, at some point, even in our own jurisdiction.
Yeah.
So you have to jump. We had a client recently that we helped out set up for the purposes of, hey, I'm over there anyway. It'd be great to see if I can shelter some of my income over there. So we helped them set up a company in Nevis, but it's a lot of like, you basically got to have a business plan.
Yeah.
Like, you're not just willy-nilly, let me open up a company, move some up. Like, they want to know, what did you do? They want more records, to substantiate that you have a legitimate business, which you should do anyway, right? So that's just fallacy number one, is that if I earn money in a foreign jurisdiction, it's not subject to US taxation. That's mostly false. Like, it can be true, but only, like, it's really only going to be a tax strategy for a pretty large corporation that doesn't need access to the cash. They're willing to leave it parked in the foreign jurisdiction and recognize that when they repatriate it, there will be tax. But even then, under the current tax code, a portion of those earnings held overseas are now subject to taxation under the Tax Cuts and Jobs Act. So the fact that it's in a foreign country, therefore you don't need to report it. 5 Pinocchios, Gary. But then my other favorite one about this is this one. Well, Gary, if I go to exchange my $100 for euros because I'm going to Europe, I don't pay taxes. Therefore, if I exchange crypto for dollars, since crypto is a currency, I don't pay taxes. Or crypto is a currency, I should just be able to buy my house with it. It's like one of those two flavors, right?
Right.
So let's take each one of those independently. I'm just trading,
Currency.
crypto for dollars.
Yeah.
I'm just trading currency. Therefore, it should not be subject to tax because when I go trade my dollar for a euro, it's not subject to a gain or loss. Where the knuckleheads are hanging their hat on is that when I say knuckleheads, I mean, like, God bless them, you know, just accept the fact that you made a lot of money off crypto for no real reason and pay your taxes for the love of God. Like even Robert Kiyosaki, you know, is like, yeah, this is all a bunch of BS, you know.
Yeah.
He's a pretty aggressive guy.
Yeah, he is.
He's the rich dad, poor dad guy, if people don't know. So we'll get to Joe's question in a second. So the hey, I just swapped currency argument. You know, it is true that as an individual, if Adam goes and says, hey, I'm going to Europe and I want to exchange my dollars for euros, you know, it's whatever the spot rate is at the time, there's no gain or loss. That's really considered a de minimis trade of currency that is just not subject to taxation. And like Germany has actually written crypto into its law to say exchanges like that, you know, that's okay with crypto. US has not done that. But the problem, the first problem that the crypto folk have with taking this position is that first off, they're not going into the bank saying I'm traveling to Europe and, you know, I need to, you know, get some euros. They're making money trading crypto.
Right.
Therefore, it is a trader business.
Yeah.
And when it's a trader business, you've only got two positions you can take when it comes to currency. You know, A, it's property, which is the position that the IRS has taken, which is crypto is no different than, you know, buying real estate.
Yeah.
You know, it appreciates in value. There are gains and losses associated with
gold bullion.
Gold bullion, right? I mean, I could make the same argument for gold, right? Like, Gary, we used to trade gold coins, therefore it is a current. Now, you know, and it's funny because you don't hear people making the same argument about gold. Right. That was actually.
When have you gone in to pay for anything with gold?
Yeah, and when have you gone into the pawn shop to sell your gold and not gotten a frickin' 1099 at the end of it?
Right.
You know, so it's like the ship's sailed, right? So it's a trader business, like in its property. So in any trader business where there's property, you got gains or losses. So it's either that position, or alternatively, if I'm a company and, you know, let's say that I raise an invoice to my European counterpart for $100,000, and by the time the person pays me, you know, in euros, and then I convert the euros back to dollars, and by the time I do that, my $100,000 sale was actually worth $120,000 because of the difference in the exchange rate between the point that I raised the invoice and the point that I repatriated the euro, I converted the euro back to dollars. I have a $20,000 gain.
Yeah.
Like every time.
Yeah.
You know, it's why there's a business of currency hedges. You know, to protect against the downside risk that goes the other direction. You know, that I actually lost money, you know, in the transaction, I can at least be made whole somehow. You know, so it's just pretty ridiculous, you know, in terms of that threat. Because, like, again, if I'm trying to make the argument that, hey, it's just a currency, and if I trade currencies, you know, like if I go into the bank and exchange a dollar for, well, I don't do that every day. I do that incidentally to traveling. If I'm trading cryptocurrency, like I'm in it to make money. You know, so you kind of go back to what was the motive, you know, in doing this, and there's zero scenario.
It's not hard to ferret it out either.
Yeah, exactly, right? So then the other one is you know, I bought my house with crypto. You know, that's just another form of currency. Like, why would I have it? Again, IRS is very clear. That's not a thing. You know, you convert it back to dollars, even if you bought it in crypto. and recognize a gain based on that. You know, it's no different. That again is no different from the another one of my personal favorites that's a little bit different. Gary and I just swap houses.
Oh,
But the difference is I live in, you know, a shack. You know, Gary lives on the Walter Cronkite, or sorry, the Charles Kuralt estate, you know, next to Quail Hollow. A little difference in Gary's house price versus mine. But we just traded houses. It's a house for a house.
right.
Like, that's not actually a thing.
Yeah,
You know,
yeah.
like I got
There's
something.
the value
Yeah, I got-
attached to each one.
Yeah, exactly. I got something of value. That's considered a taxable event. I mean, you can go with the position of, yeah, but Gary, would I ever get caught? You know, chances are you wouldn't, you know, especially with the turnover in the IRS. At the same time, they're issuing releases. This is an area where I feel like Doge actually could apply a ton. Like if Doge got its smart computer people together to say, hey, we're going to use some AI and some data mining to find people that are cheating on their taxes
Yeah.
or otherwise not reporting shit they should.
Yeah.
That, I mean, like when they're estimating the amount of unreported and unpaid taxes, just based on the anecdotal questions I get asked from our own clients who are good people about, hey, can I get away with this? You know, you can kind of extrapolate, well, there are a lot of people who actually aren't
And do it.
doing it and not telling anybody.
Yeah.
It's like, well, of course there's billions of dollars, you know, annually,
Yeah.
you know, in a big pocket of billions of dollars available to go back, which, you know, again, Adam's opinion would be, you know, $50-100 million investment tops, you know,
Yeah.
could recoup that money and keep it recouped.
Yeah.
You know, kind of
Yeah, you're right.
on a go forward basis. And that to me would be,
That'd be a great AI investment.
yeah, that'd be a like IRS enforcement using AI would be a fabulous use of AI, use of government dollars to create, you know, to basically, you know, hey, let's get everybody on a level playing field to paying what they should be paying by not cheating. You know,
Yeah.
we're all for being aggressive.
Right.
It's not for cheating.
Right.
Like permanent cheating.
Yeah, right on. I've got a little tangent that I want to go back into with some of the international stuff that I thought was interesting. But Papa Joe, so yes, Jamie, he used his chat GPT and got the same answer I did, that there was no pay cut yesterday, but they're anticipating a quarter point next week. So I got the same thing. And then Joe has retracted his question.
Yeah.
Okay.
Good job, Joe. Yeah. The answer to that is not where you can pay people under the table, but you can't take a deduction for it.
Yeah.
It's called
Double dip.
yeah, it's called a gift. Just don't take a deduction for it.
And then Joe says, I used to love trading currency until they eliminated the margin trading. Made 50K in one night. Wow, good for you.
Yeah.
When UK voted to leave the EU. Well, that leads into my deal. I was on a call on Monday. And this woman had a US passport and she was born and raised in New Zealand, went to school in New York, started her business in New York, and she said, yeah, I was in Dubai and I'm actually gonna move to Dubai and I'm going to release my US passport. Like, why would you do that? And it had to do with income tax and what she's earning, because she does a lot of international speaking and whatever, right? But she said, oh, now this will be a IOU from Shoemaker. Anybody know, without going into ChatGPT, what the percentage of the population of Dubai is who are not from Dubai or the UAE? Anybody? Do not use ChatGPT. Just guess what the percentage is. Oh, Joseph, you're getting closer, but not even close. 90%.
Oh, wow.
90% are foreigners in Dubai. Well, here's why. You know what the personal income tax?
Oh, I know, it's ridiculous.
Zero.
Yeah.
And 9% business tax. That's it.
Yeah, so, you go back to, thank you buying foreign oil. I mean, it's kind of like why the Saudi Arabian government is trying to diversify its economy and they're trying to get into tourism and relocations because they're trying to diversify off an oil economy. But they subsidize, people's living. But yeah, that actually is legit, but you gotta live there.
Right. That's why she's moving there
Yeah,
to
it's like
Dubai.
you can't like fake move.
Right.
You gotta move.
Pretty interesting. Joe, you asked what the cost of living was in Dubai. I don't know, but we have Liz who works for us she's originally from South Africa and she was a nanny in Dubai.
Yeah, probably not super expensive.
Yeah, she loved it. Now you have to enjoy a lot of hot.
Yeah.
And better have good air conditioning.
Right.
But very interesting. So anyway, I just thought, wow, that is interesting. But I'm like, but she had to relinquish her US passport. I'm like,
yep.
That's kind of a big deal, Yeah. So anyway, think about that one before.
All right. So the next one I was gonna hit on, I can't remember if you sent this one to me, or not, but it was, I bought Super Bowl tickets with my self-directed IRA.
Oh, no, I didn't send you that.
Okay, somebody sent me that one. I bought
That's a
Super
good
Bowl.
one.
Yeah, I bought Super Bowl. I bought and sold Super Bowl tickets with my self-directed IRA. So that one could be true, but that's also like beware. So what a lot of people don't know that exists, that actually is a pretty cool thing that you can do, is you can manage your own retirement funds in things that normally you wouldn't think about in a 401k, like rental property, crypto, stuff like that, right? In addition to like normal stocks and bonds and stuff like that. The reason it's called self-directed IRA is because I'm the one in charge of actually, directing the funds. So it is a real thing that exists. And usually the most common investment would be a piece of real estate, or alternatively, hey, if I was going to invest in a private equity fund in a startup, I might, because it's going to pop and be really big, but I don't have the money. I might do that out of my own self-directed IRA. I could in theory, if I had a big 401k balance and I'm sick of the market, I could roll that into a self-directed IRA and then just go buy a bunch of commercial properties or real estate properties or whatever, right? If I wanted to. So that's all a true statement. But where this one, they didn't give you like all the information. First off, you can't, as a person, you can't ever touch the money. Like Gary can't go buy the Super Bowl tickets, sell them, and then just deposit the cash in a self-directed IRA and say, no gain here to see. Instead, what Gary has to do is he has to like talk to whoever manages the 401k or the self-directed IRA, get a checkbook, write the check from the IRA to buy the tickets. And then deposit the money back into the IRA account such that it never hit Gary's bank account. So that's kind of rule number one.
So you could do that.
Yeah, you could do it. That's kind of rule number one. I think where I would be concerned, first off, am I really going to make that much money at it, relative to anything else? Is the juice worth the squeeze? I think the other issue that I'd be concerned about too is there's a whole thing around self-dealing. So I'll give you that you got to be careful of, and I'll give you a good example of like you would think this would be allowed, but it's not allowed. Self-directed IRAs are used most commonly by our real estate clients because it's a great way to hold real estate. If you're a real estate investor and not have to worry about paying gains, it's kind of like eventually you're going to have to pay taxes, but it's kind of like the ghetto 1031. Like, hey, if I don't want to invest all the gain, or alternatively, I don't exactly know what I'm going to invest in and I'm not going to hit the time windows for 1031, self-directed IRA is a really good option. So a lot of our real estate clients do it. And then also a lot of our real estate clients are also broker dealers. So in real estate transactions, there's typically a broker commission.
Yeah.
Pretty standard what that rate is. It would seem logical that if I was buying and selling property, I could pay a commission to myself, given that if I wasn't a real estate agent making the same investment,
Yeah, you'd be paying it.
I'd have to pay it.
Right.
Nope.
Really?
Yep. That's considered self-dealing.
Wow.
So that's why I said it's
logical.
It's logical, but it's not allowed.
Wow.
So the where I would worry about the Super Bowl guy is like, hey, I bought 4 tickets, 2 of them I used personally, 2 of them I sold. If I bought all 4 together out of the IRA and then used 2 personally, that's not good. I need to buy the 2 that here and then the 2 personally that I used.
Right.
Did I swap them per chance? Like, hey, I bought these tickets over here, but these are even better tickets. I want to use the good tickets. And it's messy. In other words, like it was a 1 minute reel that is a very complicated, highly scrutinized area that I wouldn't just go get excited about and say, oh, sweet, self-directed IRA, I'm just going to start buying and selling stuff.
Yeah.
In it, and think that, and think that I don't really have to follow a whole lot of rules other than some easy self-reporting.
What's another one that so I'm going to turn the table on you and say, what's one that people are told, no, don't ever do that, but is fully allowable? So we'll flip it.
Yeah.
Right?
Yeah. So, I mean, it's funny. It's not necessarily that much money, but every dollar matters. The home office deduction, to the extent that you can substantiate it, is totally legitimate. The IRS even has like hey, if you don't want to fool with the calculation of like the percentage and stuff like that, we'll have a de minimis safe harbor that just as long as you don't claim over this amount, no questions asked.
Really?
It's not that much money. I think it's like $800 or $1,200 a year or something. So it's not that much. But at the same time, the fact that the IRS recognizes, yes, it's allowable, but you hear people say, if you put the home office deduction down, red flag.
Right.
Like
I always heard that.
Yeah, red flag. It's like, maybe not. I don't really believe in the whole red flags thing when I believe that the red flags are true if you're in an area where the IRS has publicly said we're going to scrutinize the heck out of it. Or alternatively, you do something really, 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 really dumb, like claim the fuel tax credit, but you don't own a business.
But the flat bill CPA, non-CPA.
So they could, yeah. So home office deduction would definitely be one of those where, hey, that's if you can substantiate it, it's totally legit. I think we're bigger fans of, hey, if you got vacation property, can you self-rent that from yourself and call that your, remote office, versus taking the home office deduction just because the amounts are bigger. But, it's totally legit. Another one that you hear from CPAs all the time that's related to the home office deduction is the Augusta rule, which is the ability to rent your own home for up to 2 weeks without having to claim the income associated with it. Again, it's totally legitimate. I think where people get it, so it's not a red flag, but where people get, because that's not even reportable anywhere, other than you took a deduction in the business under rents, but good luck finding the $2,000 that I paid for myself for somewhere else. I think where that one would be harder to substantiate though is like, what was I using the house for 2 weeks for out of a year? That's the part where I've always been like, yeah, you could, but what were you using the house for? If you host the Christmas party, that's fine,
Right. But vacation.
Had our quarterly meetings, there, had our annual strategic planning retreat there, yeah, that's fine, but just like, I'm ready, just because I can, I'm doing it, it's like, you didn't really, especially if you're also deducting the vacation as the annual meeting.
Right.
Like, well, how many annual meetings did I have, Gary? So I think with that one, before I just go for it, it's like, what else is there that's actually worth more than just taking that one? But if I wasn't doing anything anyway, it's totally legitimate.
Yeah. So I'm gonna ask one other, and if you guys have questions, stump the chump, and you can remain anonymous. I will not call you out. If you want to ask a question that you're like, hey, you're wondering about. But we know that a red flag is boats.
Yep.
Right? But we also have clients that have bought big boats.
Yep.
Legitimately. And been able to legitimately deduct the usage of that boat.
Yep.
So, I mean, no different than airplanes, I guess, but boats seem to be red flag.
Yep.
So talk about when it doesn't work and when it does work.
Yeah, so when it doesn't really work, or at least, beware would be if BGW bought a boat and fully depreciated and deduct. Like, we're a CPA firm. Like, what's our business purpose for a boat? Oh, client entertainment, It's like, kind of like, in theory, I could substantiate that, but like, I'm gonna get a lot of heavy scrutiny in terms of like personal use, all that kind of like
logging in.
Yeah, logging in, like, So that's where it doesn't work, especially if I don't have a lot of other income, to offset it somewhere. Meaning like, yeah, I sell I sell stationery on the side as a side hustle. Can I deduct my boat, Gary? That's not right. But I'm taking out potential customers on it, and I made $1,000 selling stationery last year. Can I deduct my $250,000 Mastercraft wake boat?
Right.
Like, it's hard case, from that standpoint. So that's where it generally is going to be a problem. Where it's going to be legitimate, is really three avenues you can take. Avenue number one, which which is actually related to avenue number two, which I'm a fan of. Like, I'm going camping this weekend.
Yes.
And I rented an RV. I rented a Winnebago Rebel through an app called Outdoorsy.
Cool.
And it's going to cost about $1,000, which I felt was a little bit overpriced, but I didn't have a lot of choices.
Yeah.
But as I started thinking about this for a minute, the person that I'm renting the Winnebago from has like 150 reviews. So if I just do some simple math on 150 times $1,000,
yeah,
that guy just had his RV paid for.
Right.
And he still has the RV. So clearly I'm in the RV renting business. I can deduct the RV, even if I'm using it occasionally for personal use. But was I really using it for personal use, or was I cleaning the thing?
Right.
Or giving it a shakeout, whatever, right? So I think, or drove it around for advertising or whatever, right? So,
Right.
you know, like I legitimately am renting the thing out absolutely all day long. You can deduct that. I think category number 2 that's somewhat related is, you know, Adam owns a boat, which Adam actually does own, you know, a crappy ass sailboat on Lake Norman. And Adam goes to Gary or Gary approaches Adam and says, "Hey, I could use another brainstorming session." Like
those have been quite good, by the way.
Yeah.
We've done one.
Right.
So it was really good.
we go out, you know, on the boat and do our brainstorming session. It's very productive.
Yeah.
And then we come back. I can write myself an expense reimbursement for the use of the boat at a fair market rental rate, no different than you know, submitting mileage, you know, for personal use of my car. That's our preferred method. If the business owner owns the boat and uses it occasionally for business use, is just treat it as an expense reimbursement.
So here's a question. When we did said brainstorming day, which we did at Lake Norman, you were part of a boat rental club.
Yep.
Where you could pick different boats and go out. And so we got a pontoon that day and we launched the vault as a result of that. It was fun. I mean, it was a great day. But if you're paying a monthly subscription, if you will, to be a member of that boat rental group, I would assume you could go ahead and deduct that day or a prorate of that month, right?
So what you end up doing in that scenario is you can't deduct the boat membership, but what you can do is deduct the equivalent cost of renting that particular boat for a day. So
got it.
In that case, I was actually in the money because the boat membership fee is $270 a month, but renting that pontoon boat for a day would have been about $500.
Yeah.
So
boom.
Yep. There you go.
I hope you took that deduction 5 years ago.
Unreimbursed partnership income, baby. For expense, baby. Yep. UPE.
UPE. All right, that's good.
Yeah. And then the third way is actually kind of that Gary was referencing in terms of like a big boat that we got a deduction for, is actually very similar to the RV rental. It's like, hey, I've got a boat. It's legitimate business as being a charter.
Yeah.
You know, that you, even if you use it sometimes for yourself, you know, as long as you're tracking your personal days and prorating the expenses, you know, you can do that all day long.
So we have a client that we brought on, big construction company out on the east coast of North Carolina, and they were working on, and they do a lot of government stuff, but then commercial stuff, but they were working on a deal that was on an island.
Yep.
They needed to be able to get heavy equipment, big stuff, not, you know, barge stuff, but, you know, big stuff over to the island. So they ended up buying a big fishing boat.
Yeah.
And by the way, they're also big sport fishermen.
Worked out great.
And it worked out great.
Yeah. I'm gonna use the Hatteras to move my dozer. Yeah, that's funny.
Yeah, so I just thought that was pretty bright. And I don't remember if they were able to, you know, if they actually took it as a deduction, but I remember we were talking about it. So again, I thought that was pretty creative though.
Yeah.
You know, so.
Oh,
wait. Oh.
Yeah,
Joe.
that's,
yes, that's very true.
Yeah. No, I've got a lot of stories about that.
Boat ownership should have a pain and suffering component. Yes, that's true.
Yeah.
We had a boat that we had redone. It was a direct drive inboard 327 Chevy Chris Craft. And the engine caught fire while we were out.
Yeah.
We got it out and we were able to salvage it, but oh man.
To Joseph's question, I don't know what invited is, but you cannot deduct membership fees, period. It doesn't matter what it is, but you can deduct the equivalent of what a guest would pay. So like the common example that we have
Yeah.
is, can I deduct my golf membership? No, you can't. But if I go out and play golf with Gary for a legitimate business purpose, I can deduct the amount of the guest fee associated with that round. So this would be the same.
Yeah.
Same concept.
Yeah. Well, that's some serious money if you're Pinehurst.
No, yeah, it
some of
adds
these
up.
places, so.
I've got a few more, but I'll hit on one of my last favorite ones that's been pretty funny. Art.
Oh, yeah.
So art, you see this all the time. Here's a deduction nobody knows about. Art. Pay no taxes by buying art. Okay. So art has, this one has two flavors. One that is like, you could try that, but I don't recommend it. And the other is, yeah, you get a deduction, but it's going to come back and bite you later. So the latter first, you can get a deduction, it's going to go back and bite you later. Is everybody can see the anything but typical side. I mean, let's assume for a minute that Gary commissioned Heritage Graphics to do that, but let's pretend for a minute that Gary somehow found out who Banksy was, and then commissioned Banksy to do the anything but that would be a highly valuable item, right?
Yeah, right. Right.
$1 million for that sign.
Yeah.
BGW would get $1 million deduction for that sign. So it's like it's a Banksy. We bought a Banksy. It's in there. We just got $1 million deduction for buying the Banksy. Perfect. If we sell the Banksy, its tax basis is now zero because we fully expensed it.
All right.
So we're going to have to pay $1 million in ordinary income to recapture the depreciation. And then anything north of the $1 million is going to be capital gain. So in that scenario, all I really did was kick the can and delay.
Yeah.
So I didn't really get a permanent tax benefit. I just delayed.
Yeah.
So this one, so that's okay, yeah, you could do that, but it's going to get you away. It's just a timing difference. It's no different than, should I buy a car? It's like, yeah, but just remember when you go trade a car, trade or sell the car, it's going to come back.
Right.
The other one that I think is really nefarious is this one that I really, like somebody can do this, but it's like, I wouldn't do that. And remember, I'm a big fan of doing stuff.
Right. You're fairly aggressive in the tax code.
So same scenario, we have this sign. And Jennifer, Gary's wife, paid it. Gary commissioned Jennifer, to paint the sign for $100.
Yeah.
Gary finds some shady ass art appraiser.
Yeah.
Who then appraises Jennifer's
$100,000.
Right. And then Gary donates it to charity with the right to keep it hanging here and the public can view it for the next 10 years.
Wow.
In theory, that's true. Because where that falls under if I'm a big collector of art, like legitimate art,
right?
I could do that. It's like, hey, I've got this beautiful piece. I bought it. It's going to hang in my house for a little while, and then, New York Metropolitan, you can have it. In the next couple. Yeah, I could take a charitable contribution for that, right? No different than anything else. So it's just that Jennifer Lover, she's not.
It's not worth $100 million.
And who is this appraiser?
Right. Do we cheat him now?
Yeah, exactly. So it's just a bunch of BS. So anywho, so the question that we just got there, what's the latest on 50% entertainment deductions for employees versus clients? It's been phased back down. There's a grid that we've published before that I think it's probably easiest if we just publish the grid of what's allowable and what's not allowable to everybody that's been on the webinar.
All right, cool. Yeah, we can do that. We'll be coming, I'll get Jamie to send it out to everybody.
Yep.
Great question though, Donnie. Thank you for asking that. Any other questions while we're coming up to the midnight hour of noon Eastern time? This has been fun riffing with you.
Thank you.
We do have fun here, and we're still learning the tech. It's funny because if you go into this mode, all right, that's great until somebody walks over there, and then they become part of the scene. So
Yeah.
we're still learning this technology. Any other questions before we sign off? Let's see what you guys have been pretty good. We went from 1 at 11 o'clock going, it's just gonna be you and me.
Yep.
To 26, and now we're at 22. So thank you guys for joining us. Next week, just so you know, can you blur the outside? No, I don't think so. We're using the neat bar, which is pretty cool. We appreciate Ascend making sure that we had this, but next week we're gonna have in the studio with us live, former KGB spy that was embedded in the United States. His story is incredible, and I know him personally. He's a friend. Jack Barsky is his given American name. It was Dietrich, and I don't remember, but from East Germany during the Soviet Union. And he's an entrepreneur now as well, but there's a lot of his story that directly applies to entrepreneurship because he had to make it up, like, and some against all odds in many ways. And he's a big favor. I mean, he favors America. He loves America. He loves capitalism and abhors what he once saluted, which was communism and, you know, the great lie. So interesting cat. Jack Barsky, be here next week because he's going to be in the studio. So that'll be fun. Okay, good. Thank you, Joseph. I'm going to have to send this to me. This is a great little two-way street here today, man. So thank you for doing this. I'm going to take your notes and put them in my Word document and send them to myself. We will put this thing up on the BGW CPA YouTube channel later on this afternoon, and putting my notes from Joseph in here. Thank you very much. And you guys have a wonderful day. Appreciate you guys being here. Let's see what we got. One more message on here. What's happening here? It pays to know experts.
That's right.
Yes, it does. Thank you all. Thank you, Papa Joe. Good seeing you here too. You guys have a great day. See you around.
Guys.
Bye-bye.
All right. Thank you, sir.